too.
I got one too, absolutely. Let me ask all of you to return to your seats so we can start the program. Let me welcome all of you today to the Peterson Institute for International Economics. We've got guests today from as far away as Australia, so I'm delighted to welcome Peter Drysdale back to the Institute on one of his visits to Washington. This is a special day, and it's a great personal pleasure as well as deep honor to hold a session with Robert Zoellick. It's no hyperbole to say that Bob Zoellick is not only one of the finest public servants of his generation, but one of the finest public servants of any generation. Bob has had an enormously distinguished career in the U.S. government through the 1980s and 1990s, at the Department of Treasury, at the Department of State, playing crucial roles in everything from the Plaza and Louvre agreements through German reunification, where he was a very central player and has been recognized for that by the German government, whose ambassador is with us here today. Bob then led U.S. trade policy, initiating the Doha round. I can't resist saying that the speech in which Bob was to announce what was to become the Doha round was scheduled to take place in this conference center, in this building, on 9/11/2001. And as I drove in and noticed smoke going up from the Pentagon, I thought, uh-oh, I'm afraid this meeting is not going to take place. Bob was in a bunker somewhere. But we rescheduled for 10 days later, and that history went on. And Bob not only did that, but with the help of some key lieutenants who are with us today, negotiated a whole series of trade agreements that resumed active U.S. participation in the world trading system and leadership of it. Then Bob moved to become Deputy Secretary of State, and another little vignette I can't resist. I remember meeting in his office at USTR just as he was packing his boxes and getting ready to move to state. And I tried out an idea on him, which I just decided to float in a new book, the idea of being a G2 for US and China. And I think Bob kind of liked that, and quite properly, without ever calling it that, of course. As soon as he got to state, he started the senior dialogue with the Chinese, which later morphed into the strategic economic dialogue, which now morphed into the strategic and economic dialogue. But Bob started that and launched what has, of course, become a critically important consultative process between the two largest economies in the world, without whose cooperation we're not going to get very far in dealing with global economic problems in the 21st century. Bob has had interludes where he's had extremely productive careers in the private sector, at Goldman Sachs, at Fannie Mae. He has taught in a variety of universities, Naval Academy included. He's written numerous articles and contributed to the intellectual dialogue from a whole variety of locales and venues through the course of his very distinguished career. Today, though we'll talk about, I'm sure, all of those issues, the initial focus, at least, will be on his latest contribution as president of the World Bank. I've stressed that Bob has had an enormously distinguished career as a U.S. government official, and he has, of course, been extremely effective in promoting U.S. national interests. But one thing that I've always particularly admired is that he has done so in a way that I at least always interpreted as promoting global interests as well. He's been able to simultaneously advance the interests of his own country and the interests of the world economy, I think not seeing a contradiction between them, but rather a reinforcement mutually between them. And I think he's been uniquely skillful in promoting simultaneously those two huge policy objectives. So in this latest incarnation, he had an opportunity to run the World Bank. He'll be leaving at the end of the month. His succession has been chosen, as we all know. And so, at least in the first instance today, I asked Bob if he would be willing to look back over that period, tell us what he feels were his greatest accomplishments, the things he's most proud of having achieved at the bank. Maybe also, so it's not all softballs, ask him what he might have done differently as he looks back now over his record at the bank. And then, if it's not too much to roll all into one series of responses, and we can divide it up if you want, vision for the future. What should be the mission of the bank going forward? What should be its strategies? What's the agenda that you leave to your successor and the member governments that you think should now drive the future? So, with 3 easy, short, succinct questions of that type, let me ask you to reflect on this latest legacy and where it should go now in your absence.
Well, thank you very much, Fred. I couldn't get beyond the extremely generous introduction because I kept thinking, I hope somebody took notes from my funeral. It's
on video.
It's on video, good. You can just play it back at the appropriate time. But I also want to thank Fred for the invitation to be with the Peterson Institute. I always have a special warmth and respect for not only Fred, but the people who work here, because I found over the course of some years in Washington that it's quite a rare combination of having first-class scholarly work, but that is also very policy-driven and is extremely timely. And Fred has a formula for this, and I'm sure that his successor, Adam Posen, will also sort of continue in that tradition. So I appreciate the opportunity. So what would you like to start with? Kind of
review what you think were the major accomplishments, the things you're most proud of, what you feel the bank has been able to accomplish and contribute over your tenure.
Well, I tend to see my role over the past 5 years in sort of 3 phases, but of course they interconnect. The first one was I came at a time of some turmoil, so I had a turnaround. Since part of this, I think, is also how multilateral institutions work, I'll try to share some insights on this. The bank has some fantastic people. We have people from 170 different countries. One of the rewards is how to try to be able to mobilize and draw people from different backgrounds to be most sort of effective. And fortunately, my key judgment early on was the sooner that we got people focused on the core work to do, the more we'd get people away from water coolers and internal dissent. And we had the advantage that shortly after I came in, we had a series of crises which could focus the mind. Most people will obviously focus on the financial crisis, but in the development field, people have a keen eye the fact that we really started with food and fuel prices sort of late in 2007. So the second phase was trying to make sure that the bank, which is a long-term development institution, could also be a problem-solving institution in the worst economic downturn since the Great Depression. And that may sound sort of more obvious or easier than it in fact is, because I remember actually, if you take the food price crisis, one of my sort of standard management tools, and we've got some of my former colleagues here in the office, is to have a morning meeting where I get together all the senior people, but it's a pretty good group, and we go around the table. And I remember starting to look at some of the increase in food prices and asked about the danger of this for developing countries. And I still recall some of our economics team said, well, yes, but when you look at the countries that will be able to have to pay more for food, they also should be able to gain from higher commodity prices, so it should all work out. And I introduced the idea of disaggregation because this wasn't necessarily going to be the case. But also, it was interesting, another response was, this will be an issue for humanitarian agencies. We're a long-term development agency. but obviously if people can't get through the short term, you're not going to get to the long term. So part of the challenge was actually to work with the UN and humanitarian agencies, focus on the immediate, while also, in this case, planting the seeds, for example, to use agricultural productivity and production to create higher incomes going forward, including through the private sector. And when we look at the crisis as a whole, I think the bank's commitments are well over $300 billion. But as important as the sums are, was our ability to try to work with countries and customize the services for the particular problem. So let me just give you an example or two. When the crisis hit, Indonesia wanted to have a modest stimulus program, but the finance minister, Sri Mulyani, who now works with us, wasn't certain that she could get access to markets. So we put together a backstop facility with Australia, with Japan, with the Asian Development Bank, so she could present a budget and be assured that they would get financing. Another one, and this is quite apt today, is the Western European countries tended to focus on their problems and not pay so much attention to the effect on their banking system on Central and Eastern Europe. And so we worked with the EBRD, first of all, and then the EIB and the EC to put together this Vienna initiative to try to work with banks from France and Austria and Italy to sort of stay in the market. And that's something we've had to actually reactivate in the current period, because just to give you a little interesting factoid, I think about 30% of Bulgaria's deposits are in banks that are in Greek banks. So you can start to see the ramifications of this. So part of our challenge as an institution was how we could customize, be faster, more flexible. And then I guess leads to the third phase, which is, I think, one of the challenge is how do you continue to modernize multilateral institutions? Not being private sector institutions, you don't have the same profit motive bottom line. And this ranges from everything from, we were able to get the first capital increase for the bank in some 22 years, to trying to, for example, one of the biggest changes from my tenure might end up being an initiative we launched to open up all the data and information of the bank going back decades, and really not only adding to the transparency of the institution, but starting to change how people think about development. So as opposed to being elite sort of top-down model, our notion is how can we work with clients to solve problems, and the notion of the client moves beyond the government to, frankly, the community. So you can now call up our, the countries we work with, find any individual projects, get the data, and before long we'll have this in an interactive form. And when you start to think about local ownership, the effect on integrity programs where people can, in a sense, check to see whether what's supposed to be being done in a village is being done, this really has some transformative effects on the notion of development. And the one reason I highlight it is that, and I'll conclude with this, when there were discussions about my successor, one individual, not one of the three finalists, it's interesting, when sort of made the point to say, look, the bank should just focus on these three things. Okay? And I found that interesting because it's really a 180-degree contrast from my sort of policy model, which is to work with the client, get a sense of what they see the problem is, and then try to bring our resources and other resources to bear. And so in some ways, the three big things model is, in my view, a throwback to some of the development mistakes of decades before, where an elite university or elite professor says, I know all the answers. And what we've learned is we need to have knowledge and interactivity so that we can contribute, and other, increasingly what's characterized in the field of development is you're getting examples and insights from other developing countries. And that is kind of part of a rich network. But I think the days of sort of the top-down development planning are thankfully gone.
Let me digress a little bit from the order I had in mind to pick up on two things you've just said and draw you out a little more on them. You mentioned the bank's role in Eastern and Central Europe in the previous stage of the crisis. What about right now? You've gone back into Hungary, I think, but there are an increasing number of people who say Greece is not an IMF problem, it's a World Bank problem. World Bank to help in Greece?
Well, let me start with the easier parts. And it also goes to the role that I think these institutions can play in an anticipatory fashion. I'm most focused on the aftershocks for Southeastern Europe and the Balkans, which obviously have political and security dimensions for countries that have been through civil wars in the recent memory. And then also the effect on North Africa and to a degree on trade finance, particularly for West Africa. So these are some of the aftershocks you need to prepare for in dealing with the crisis coming out of Europe. And just to give you a little example with some specificity, I think some people may remember that the European banking authorities made some pronouncements about capital levels, but they didn't say how the capital was to be achieved. And you actually had some of the national regulatory authorities in Central Europe telling the Central European banks they actually should be pulling out of the Balkan countries that they operated. And so, quite interestingly, I called Mark Carney, the head of the Financial Stability Board, who I think is a first-rate public servant, and he had noted the same thing, and we started to then push back a little bit on the European banking authorities, but equally important, tried to go and reassemble this group and try to show that we could provide some additional financial support, but to try to keep the banks in that market.
This being the Vienna Initiative.
Pardon? The Vienna Initiative. Yeah. But in the case of Greece, my own view is we've tried to keep a little distance from this, in that on the one hand, your intuition is right that I think this is partly a structural and microeconomic reform issue, and I think that's one of the topics that's been lost in the broader discussion, which is focused more on the macroeconomic elements. And what I see in the developing world is actually a much greater focus on the structural reforms for future productivity and growth. But we have to decide how we're going to allocate limited resources. And frankly, these are also the political judgments that you make. And my concern was that if the bank were drawn in and sort of became the reform taskmaster for the Greek government, given the political tensions, that it might not be as productive for Greece as it would be harmful to the bank. So this is a sort of role that I think others may need to play, but this is where some of the political judgments come in about whether this would be something that would serve as the bank's interest, recognizing that we do, particularly in terms of technical talent, our first call should be for developing countries.
You also mentioned the succession process that's just occurred at the bank. We've had one here at the Institute. You referred to that. I'm pleased as punch with the way it came out. Let me ask you to comment on the succession process at the bank, and particularly look forward to the next round, presumably 5 years from now. How do you feel the succession was handled at the bank in this round to succeed you, and what would you recommend for improving it in the future if you think it needs further adjustment?
Well, first, to make clear, I was not part of the succession process, except but sometimes informally people might ask my view on something, but I didn't proffer views that I wasn't asked. I think the starting point is for people to better understand what the job of leading these institutions is about. And my own sense is that more than is generally recognized, as is the case for many executives, you actually need a multiplicity of skills. It certainly helps to have some backgrounds in economics and finance, but you've got a lot of talented economics specialists at the bank, and very great financial minds as well. So it helps to be able to interact with those people as you will in other types of public sector jobs. But just as important are diplomatic skills. You have 188 shareholders. Some sense of communications and political skills, because you're working across different systems. You're having to maintain support from developed countries, in this case under pressure. At the same time, you're trying to get the emerging markets to play a sort of more active role. And importantly, for any multilateral institution, the least common denominator sort of position is allow procedures and committees to choke off action. So you need to have some sense of how to move those institutions, but move those institutions in a way that tries to bring people along. So you, in a way, you want to have a system that tries to encourage innovation, fresh thinking. It certainly doesn't come all from the top, but instead to try to create a framework, whether it be gender and development, post-conflict security, the role of middle-income states, the different set of problems, and encourage it. And sometimes when people talk about the job, they actually, I think, miss a lot of the executive diplomatic sort of qualities as much as the pure developmental ones. I'll say this other thing about the big issue, of course, is the U.S. role in this. And here I will just offer a bit of a contrarian opinion based on our mutual careers. And that is, I've spent 25, 30 years either in the U.S. government or working closely or being interested in it, trying to have the United States play an active role in the multilateral system. And that system has changed enormously. You talked about unification of Germany and NATO. We talk about the WTO. We have regional trade agreements. So I'm not trying to say multilateral is just being global, but a multilateral system. And so I actually think it's a very good idea for the United States to have the responsibility of having some of its citizens in leadership and indeed top leadership roles in these institutions. And if you ask yourself how many Americans have been head of the World Trade Organization, the IMF, UN Secretary General, any of the regional development banks, I could go on, you'll find that the number is 0. And so my view is it may not necessarily need to be the bank, but let's be careful about pushing Americans out of these jobs, because A, you may not necessarily like the consequences in terms of U.S. support, but B, I think it's important for the United States to have a sense that the United States was, in a sense, one of the catalysts and founders and designers of this system. And I still think the United States needs to play a key role as the system evolves. So I think it's important that the United States not be detached from it. Having said that, it doesn't necessarily matter which institution. I'd be available for the IMF the next time around if you'd like. But I do think that's a point that's sometimes missed.
So now you're talking about systemic responsibility, rightly so, and you mentioned along the way the effort you've conducted to bring the emerging markets into playing a more active role. And I want to talk a little bit specifically about China later, but let me ask you the broad point. How do you feel that process is coming? Are the emerging markets stepping up in the bank? Are they making that transition from recipients to donors? Are they playing an effective role as increasing thought leaders, sharing the experience of their development records with the rest of the world? How is that critically, I would suggest, critically important systemic process, how is that coming off your experience in the bank and elsewhere? You go to G20s, you'll be at the next one in a few days. How do you see that overall problem? These are among your biggest clients, and you work closely with them. You're probably in a better position than most to give us some judgments as to how the emerging markets are doing in fulfilling their increased responsibilities.
Well, let me set the context for this because I think it's a very critical question from a number of dimensions. And let me start because when Fred and I talk about these issues, while we try to get the economics as close to right as we can, I think we tend to see them as political economy issues as well. And let's go back to the origins of the World Bank, the IMF, and the GATT, which became the WTO. It's important to remember that, and a lot of people who come purely from economics bent, I think, lose sight of this. These institutions were created in 1944 at the heart of World War II, in part because people were trying to learn the lessons of the security and political consequences of economic cataclysm. So they designed these to try to deal with questions such as currency and exchange rates, investment, reconstruction of broken states, development, trading system. And if you think about those topics, they remain vital today. Now, the system has changed enormously. And so one of my themes was how to modernize multilateralism, how you change the system and the institutions to deal with the variety of changes in the international system. But if you have that perspective, it gives you a slightly different strategic outlook on the challenge, for example, of middle-income countries. So when I came to the bank in 2007, there was a very strong view in some quarters that said, look, the bank shouldn't work with the middle-income countries. The bank should be working just with the poorest countries, and the middle-income countries can take care of themselves. If you have the strategic perspective I outlined of a multilateral system, it would be a mistake of historic proportions to push the middle-income countries out of the multilateral economic system just at the time that, frankly, as we've seen in the past 5 years, they're playing a greater role in the international economy. So one of my views is whether the issue is development, trade, currency, commodity prices, increasingly security issues, the challenge is how do you interconnect these countries into the system. Now, as for the bank, I think there are multiple aspects of this. And by the way, it's useful to keep in mind that the so-called middle-income countries are the home of about 70% of the people still living under $2 a day. So even on a pure poverty agenda, this is a valid attention. Increasingly, our role with these countries is more in terms of the analytical and the knowledge and the sharing experiences than it is the pure financial. But the financial crisis also showed that under stressful situations, it's certainly beneficial to have a counter-cyclical funding source, and even some of the middle-income countries that were proud of their access to markets, it's nice to have some funding that is of longer term and be able to manage it in different ways. And frankly, through IFC, our private sector arm, we're drawing in other players, sovereign funds, equity funds, and others into the private sector, often in frontier markets. So I think that one of the issues that you'll see increasingly in the future, though, is highlighted by this report we did with China, the China 2030 report. We're finding increasingly that middle-income countries who are focusing on the structural reforms are concerned about the pattern that you've seen where economies tend to grow rapidly for a time and then they start to level off. And in our China 2030 report, there was an interesting chart that pointed out in 1960, there were 101 economies that the bank classified as middle income. By 2008, so almost half a century later, only 13 had made it to high income, and one was Greece. So this challenge, the analytical challenge of increasing productivity and the structural reforms to move to high income, I think is something you're going to hear a lot more about. Now, part of this is their role in the bank. Well, one of the things that we've tried to do is bring more people from those countries into the bank at all levels. We had the first chief economist from the developing world, Justin Lin from China. A number of the senior managing directors that I had, the next level below, from Indonesia, from Egypt, from Nigeria. This, in a sense, something you try to permeate throughout the organization. But the encouraging thing is, if you work with a number of the sort of middle-income countries, you can also get them to contribute more to the system as a whole. And let me give you one practical example. The bank has a fund called IDA, which is grants or long-term credits without interest for the 79 poorest countries. So we have to raise that money every 3 years. The last IDA that we raised, we got about $49 billion, including reflows. And I knew it was going to be very difficult to tap the traditional donors. So I went to the Chinese and I said, China no longer is an IDA borrower, but it had long-term IDA credits. So I said, could we work out an arrangement where you would prepay a considerable amount of your IDA credits, well over $1 billion, which is a special and differential way for the trade people for them to contribute to the system and add some significant sums. And in discussing this with the Chinese, they were open to it, but they said, we don't want to be singled out. And so we worked with some other middle-income countries to do the same thing. So that was one dimension. In this capital increase we got, we did a combination of price adjustments. I was able to get better access to some of the national currency paid in capital on the balance sheet that people hadn't tapped before. So over half the contributions to this capital increase came from developing countries. So one of the challenges, however, for the bank is that we have a board that is now 25 different seats, And there's an ongoing challenge for the board members not to allow the politics of the G77 to infect the bank, and to break into north-south divisions. And, but at least so far, I think through the combination of some individuals on that board who can bridge the gaps. We have a Canadian executive director who's been quite experienced and quite good at kind of reaching across the different lines here. So it does depend a lot on the people, but obviously it's the role of the executive to move in that direction too.
Okay, let me, in a way, revert to my original outline and ask you to reflect on things you might have done differently. I won't call them mistakes or errors, but as you look back, are there things, maybe there aren't any, but are there any that, with hindsight, might have done a little differently?
I think my main sort of sense of kind of where I would have liked to have done more is that given this financial crisis, sometimes you can only move an organization and your support at a certain pace. So I'm sort of an activist by nature. I like to focus on results, but I see the needs out there being so extensive that there's some things I would have liked to move a little faster. Now, some of those you try to line up to use for the future. Let me give you an example. I mentioned IFC, our private sector arm. One of the innovations that I think is quite interesting is we created this asset management company. First time, I think, on a multilateral, by the way, is created a subsidiary, didn't get much notice, where we use, we tap the sovereign funds and wealth funds through our sort of equity funds that we invest in developing countries, and these are often accessing players that we're not going to the standard Brazils or Indias, but this is sub-Saharan Africa or other frontier markets. But we started to look at the possibility of a hybrid capital issue, which would be issued to our shareholders. It would probably be better than holding some of the standard debt that they're holding today. We're a AAA credit, and we could structure this in a way that we could count a significant proportion of it as capital. It would create, going back to the middle income countries, some of these might be the players that would hold these notes. And it could be a very, in a world where it's, you know, it took us 20 years to go back and get a capital increase through all our capitals, you could add to the capital in a novel way that might be useful for other institutions. So there's tools like that that I wish you could move a little further. Another one is, you know, the bank is a cooperative, and so we have a challenge in our pricing. Is that most people would expect prices to sort of, you know, change second by second. Our pricing hadn't changed for 7 or 8 years before I came, and we now do sort of an annual sort of price change. I wish the bank had more flexibility with maturity and pricing, which would give us more flexibility to be able to lean forward. But this is a sort of tool that you might have depending on events in the international economy. So it's really the creative use of the structure that I think would allow the institution to even do more on the development side.
Well, I suspect that's a partial answer to my next question, which is, looking forward now, your successor is about to come in. What would be the 2 or 3 highest priorities that you would now place on the future program of the bank, going out for a year or 2, or even the 5-year term of your successor? Well,
I tend to be careful on this because I believe when you leave, and you should let your successor set their course. But since we are in an extraordinary period in the international economy, I would just say that if you reflect about some of the discussion of the bank 5 years ago, there was a question of whether the bank would be relevant, okay? Well, we've certainly got it into the relevancy category. And so we now have people actually urging us to, we've done some innovative things with climate investment funds, with biodiversity. I've now got the environmental community urging the bank to be part of the solution. So I think this notion of a problem-solving nature and trying to be responsive to what you perceive are all your shareholders' interests developed and developing is probably the best general advice that I could offer.
Okay, let me kind of build on that and now sort of radiate out from your experience at the bank to your broader experience and expertise. You are well known for being one of the most thoughtful, creative, and insightful big picture thinkers in the world. some possibility you might return to positions in the future that might lend themselves to such efforts. And so let me ask you to look more broadly at the global economy coming out of this crisis period. You've been in G20s, G7, everything else over this period. You've been right in the middle of the crisis management, which has also had huge systemic implications, and you already mentioned some of them. So going forward, big picture, what major new initiatives need to be taken? What new types of analysis for people like ourselves in a think tank to learn from this tumultuous period for trying to stabilize, strengthen, make more prosperous the world economy going forward?
Well, we still live in a world where the public policies come principally from nation states. So I think the challenge is to recognize the need to get the policies right at the national level, but then leverage those to drive some of the global and multilateral changes. So I start with the United States. It's the world's biggest economy, the most important economy, the most dynamic economy. And if the US isn't playing an active role, or worse, becomes a source of protectionism, that is very bad for the international economy. So I would start with a comment that I got from the Australian Foreign Minister Bob Carr, who visited Washington about 4 or 5 weeks ago. And when I asked him what his main message was, he said, the United States is one budget deal away from restoring its global preeminence. And he said, but you need to be aware that there are people in the Asia-Pacific region that are saying the U.S. isn't going to be able to get its act together, so you better listen to what we have to say. And I think that's not a bad starting point. I mean, if even dealing with the trials in Europe today, just think how the U.S. would be better placed if Simpson Bowles or Domenici, Rivlin, or others had made significant progress over the period. So we are where we are. There's a process that I think, with a combination of the fiscal cliff and the election, that provides an opportunity here. So, I mean, my number one interest would be trying to use that opportunity to make some serious headway, not just on balancing budgets, I might say, because it's also going to be important, going to our point about structural reforms, about getting the microeconomic incentives right. So, you know, one of the lessons here is kind of how you can incorporate structural reforms. And here, just to connect a little bit with emerging markets, you know, I cannot go to a developing country that isn't interested in public-private partnerships for infrastructure. And for a lot of the middle-income countries, it's not driven by the need for capital. It's the belief that the project will be better designed, better operated, better maintained. Well, you look at the US states, and you know, they got a lot of debt problems, but when I took accounting, there was an asset side of the balance sheet too. And a lot of them are sitting on some pretty significant assets, including toll roads. And it's very interesting, you know, Governor Mitch Daniels did some very innovative things in Indiana. Mayor Daley did the same in Chicago. The state of Pennsylvania said, oh, no, we can't monetize our toll roads. Well, Chongqing, China, the home of Bo Xilai, we're monetizing the toll roads. So maybe some of the states in the United States could become a little bit more capitalist in their use of these public assets. I think that's one point. But then I think, building from that, and this is where, in a sense, the real economic diplomacy comes in, is that how can the United States kind of use that to, for example, re-push the trade opening and trade liberalization agenda, which you're going to have Kevin Brady here. I hope he'll have a chance to talk to you about it, which is frankly stuck and has been stuck. And you know, that runs a big risk as you see, you know, protectionism and renationalization in economies start up. But it's also a terrible missed opportunity. If you want to do structural reforms, you know, trade is one of the best ways to sort of drive those and support reformers. I think another question that flows from what we've been discussing is, you know, you're having a changed balance in the international economy with the role of emerging markets. So how, whether it be monetary systems, trade systems, development, others, and security, I might add, can you draw those into a greater cooperative network? So to bring this back to the bank and the fund and the WTO, I have tended to view these institutions as a thin tissue that can connect the sovereign states. It's a mistake, I believe, to ignore the fact that the sovereign states have to drive policy, but it's an equal mistake to sort of disregard the role that these institutions can play in drawing attention to issues, coming up with multilateral solutions, sometimes having resources to bring to bear, and trying to find cooperative solutions.
Let me just ask one follow-on to that. You talked about the individual institutions. What about the steering committees? You're going to a G20 summit in Los Cabos in a few days. The G20 played a big role early in the response to the global crisis. Some people feel it's run out of steam, and this upcoming meeting, for example, may not be up to the task that we now face. But again, thinking of it from an institutional standpoint, with your unique experience of this, going back 20 years to G5, G7, all the Gs, how is the current coordination process working, and is there a need for further evolution or reform in it to achieve the kinds of goals that you're enunciating?
I think well, let's start with the G20. Clearly something beyond the G7 was called for because of the changing economic weights. So the good news is the G20 has got more of the influential players around the table. The bad news is you have too many, and it's always harder to get things done in bigger groups. So based on diplomatic experience, what it would suggest to me is the critical importance of informal subgroups. So this is where the G7 should not be abandoned, but also you could have the North American countries, you could have the US and Europe. If I were guiding US policy, I guess I would want to have a Venn diagram where I was interconnected with as many subsets as possible, including key emerging countries. So this is an idea that I think I had floated a while ago in a different G20 context. Just think of the effect on the international system if President Hu and President Obama stood up at a summit and said, this is our joint structural reform agenda. So here are the things that China is going to do based on the China 2030 report. Here's the things that the US would do, whether it's based on the types of budget discussions or other aspects. And that there are sort of parallel processes, but we're both sending a signal to the world under your G2 idea that we have to focus on structural reforms. You know, part of, you watched with the whole G7 process that Baker led, part of this is kind of the communication of, and with the policy substance. So I think a little bit more creativity of those sort of ideas could be called for. Now, having said this, I think it's important when you look at the G20 to look at different tier issues. There's actually some useful work being done on things like financial inclusion and trying to create better environment for public-private partnerships for infrastructure, natural disaster resilience. There are things that can save lives and improve economies, but they're not headline news. And so I think it's important not to throw those out, and Mexico has done a pretty good job of trying to encourage those going forward. But the bigger things that fit the times, I think, going back to my sort of core point, will require the big economies to play a leading role.
All right, then my final question, and then we'll open it up, follow up on that, and you've mentioned it inevitably several times in your remarks, China and the role of China. You mentioned your 2030 report. I think it's a superb document. I know you worked it out very carefully with top Chinese authorities. It's got a lot of legitimacy in China itself. Coming off that springboard and all the rest of the work you've done with China, what's your outlook?
As they consider some stimulus, will they return to the model they used in 2008, which is the basic sort of traditional investment expansion? Or will they start to make some of the structural reforms that are important to change their model of economic growth? And that was the whole motivation for the China 2030 report. And to give the Chinese officials appropriate credit, you know, this is an economy that was growing 10% a year for 30 years, but there are at least some people that are saying, you know what, this model isn't going to continue to work forever. We're going to have to think about how we actually move to increased domestic demand and change the fiscal system and add to higher value-added production and a series of other things. And so in some ways, there's some interesting lessons there, perhaps for developed economies to consider structural reform agendas. And what's interesting, and this shows again the evolving role of the bank, we're already finding this with other middle-income countries. There's an appetite and interest in learning from the sort of Chinese project going forward. So I think the challenge will be, to watch how China will pursue these reforms. My own sense of China is that I would not expect a big bang. I would expect incremental pilots. I would watch in 2013, something Governor Zhou of the People's Bank of China pointed out to me, is that there's the third session of the 18th Party Congress late in 2013. So he said I would look to see whether the leadership, in a sense, takes some of these ideas and advances them at that point. The planning process, of course, has drastically changed in China from the old days where the NDRC gave detailed directions. So the other thing one has to do is you have to look at what's happening in the individual provinces, because many of them are 100 million people and others. And so I guess I feel, without being Pollyannish about it, from talking with various provincial leaders, I think the move for reform and the recognition is afoot, but how far and how fast, it's hard to tell. Now let's connect that to the United States. If they make some of these reforms, there are actually some interesting opportunities to strengthen China's engagement with the United States and others in the world. And these are things we actually talk about in the report. So for example, service sector reform. One of the ways to increase productivity is to add competition in the service sector. So it's not unknown in the process of development. Many countries start with the agricultural sector, then move to manufacturing, sort of export-driven sector. The service sector doesn't proceed as fast. And again, going back to my own experience, something you may recall, in the Bush 41 administration, when I was at the State Department, we launched this structural impediments initiative with Japan. And in some ways, some of the problems of modern Japan are they didn't take the report and work seriously because they didn't really improve some of the productivity in some of the non-traditional manufacturing sectors. So in some ways, China can learn from Japan's mistake, which China likes to do. These could be the types of things that would also opportunities not just for private investment of Chinese firms, but also foreign firms. Cross-investment. You're going to have the Chinese look for investment opportunities, which can create jobs and create various tie-ups. Energy and water efficiency. There's going to be big, huge issues. I mean, China's a very dry country and is very short of water for its needs. So there's that possibility. As they move up the value chain, as they try to move to sort of technology development, there could be some possibilities in strengthening IPR protection. So what I think is interesting about this, in going back to your reference about the strategic economic dialogue, is that while I know you feel very strongly about the exchange rate issue, in some ways you can move some, and similarly, the changes they're going to need to make in the financial sector are the types of things that will move to an open capital account, and then we can have the exchange rate determined by the market. So I think there are openings that I hope creative policymakers in the US and others that use to try to push in the direction where the door is being opened.
Just for the record, I testified to Senator Warner's Senate Banking Committee on the China issue a couple of weeks ago, the Strategic Economic Dialogue, and I came pretty close to declaring victory on the exchange rate issue. Since the rate's gone way up and the current account surplus has come way down, and Bill Klein's analysis shows that if they just let the rate keep going up at the pace of the last couple of years, their current account surplus will disappear in the next 3 years. So pretty close to declaring victory, as long as the Chinese continue with what they're doing.
But the real issue is if they move to an open capital account, which is what they need to reform the financial system for their own interest to do so, then we'll figure out what the exchange rate is because the market will tell us.